Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that we'll be watching for the Chinese holiday demand signals, and watching how the US Fed handles new sharp political interference. Also this week we'll bring a slew of big economic announcements in many places, but not China, which is starting its Lunar New Year week-long holiday after the PMI data is released later today. Elsewhere, it'll be a big week of central bank policy reviews, capped by the US Fed, although they are expected to deliver no rate change. However, both Canada and the ECB are expected to cut rates by 25 basis points. Sweden may too. Brazil is reviewing as well, but no change is expected there. We'll also get GDP results for the US and many key countries in the EU. Australia will release its fourth quarter CPI result, and of course the Wall Street earnings season results will continue. But first, the early flash release of the globally benchmarked S&P market PMI for the US for January shows that their factory sector is back expanding, with a small gain to a 7-month high. But there was a noticeable pullback in their services sector, still expanding but quite a bit slower than in December. So the composite PMI is at a 9-month low. US existing home sales are up 2.2% in December from November to an annualised rate of 4.38 million units, the most since February 2024, and despite mortgage interest rates over 7%. But in a long-term perspective, this level is still very low, similar to what they had in the mid-1990s. And there was an upgrade to the University of Michigan sentiment survey for January out over the weekend, and it was revised lower. But the inflation tracking in the survey was unchanged at 3.3% and an 8-month high. Across the Pacific, Japanese inflation jumped to 3.6% in December from 2.9% in November, the highest level since January 2023, and well above the 3.2% level expected. Food prices were a notable driver, up 6.4%. Their core inflation rate climbed to a 16-month high of 3% in line with market estimates. This bolstered the case for the Bank of Japan to raise its policy rate by 25 basis points to 0.5% in their review on Friday, and that is exactly what they did. Meanwhile, the Japanese factory PMI contracted a bit more in January than the very minor contraction in December, but their services PMI expanded more in January than in December, and by much more than expected. And Singapore's central bank loosened its monetary policy on Friday, its first such move in more than 4 years. Rather than interest rates, their monetary policy centres on exchange rates via the Singapore dollar nominal effective exchange rate, allowing the Singapore dollar to rise or fall against the currencies of major trading partners to stabilise prices. In China, we should remind you that their week-long Spring Festival holiday will start tomorrow, Tuesday, January the 28th, and run until Monday, February the 3rd. Only after that will they be back to normal. Chinese New Year is on Wednesday, January 29, which is ushered in the Year of the Snake. In India, their January PMIs show 2025 beginning with the private sector slowing and services losing steam. Having noted that, the expansion there is still very strong. But inflation pressures, especially in their services sector, are rising, suggesting growth at this level is creating distortions which will take the edge off it for most people. In Europe, their January PMIs showed they returned to growth. That came with the combination of their factory sector contracting less and their services sector expanding more. Australia's factory PMI contracted notably less in January and is now barely contracting at all. New orders rose, but prices rose faster too. Their service sector, however, expanded at a slower pace in the month. And staying in Australia, Westpac is pointing out that tax cuts there are not boosting consumer spending in the way expected. 3/4 of these cuts are being used by households to either pay down debt or increase savings. The US Treasury 10-year yield has held at 4.62%, unchanged from Saturday at this time. Reporting of Wall Street's fourth quarter earnings is well underway and is off to a strong start. Both the percentage of S&P 500 companies reporting positive earnings surprises and the magnitude of those earnings surprises are above their 10-year averages. As a result, the index is reporting high earnings for the fourth quarter relative to the end of last week and relative to the end of the quarter. In addition, the index is reporting its highest year-on-year earnings growth for the fourth quarter of 2024 in 3 years. So it is no surprise that the S&P 500 is near its record high. And the price of gold will start today at $2,771 an ounce and down $5 from Saturday, but up $55 for the week. Oil prices are holding at just over $74.50 a barrel in the US, while the international Brent price is now just under $78.50 a barrel. And the Kiwi dollar is now at 57.1 US cents, down 10 basis points from this time Saturday, but still near a 1-month high. Against the Aussie, we're unchanged at 90.5 Australian cents. Against the euro, we're also unchanged at 54.4 euro cents. That all means our trade-weighted index starts today at just on 67.4, the same as we were on Saturday, but up 60 basis points for the week. And the Bitcoin price starts today at $104,928 and down 1.4% from Saturday. Volatility of the past 24 hours has been quite low, at plus or minus 0.5%. Today, Monday, is the Auckland anniversary holiday, and most businesses in the northern half of the North Island are closed. It is also Australia Day. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.